More now on those earnings reports late yesterday from two of the biggest PC makers, Hewlett-Packard and Dell. We're joined by one of the most accurate forecasters on tech stocks, Jim Kelleher at Argus Research. Jim recently published the book Equity Valuation for Analysts and Investors. Good morning, Jim. Glad you could be with us. Let's talk about HP and Dell. Let's begin with HP because there has been so much attention on this stock given the ouster of Mark Hurd. Were you any more encouraged by the comments you got yesterday in the conference call that this company is going to be able to move forward, execute on its strategy, combine POM with 3Com, finish the integration of EDS, and continue to deliver the kinds of numbers that we saw yesterday?
Good morning, Eric. And yes, I am encouraged by the company. You know, you sketched some of the many challenges facing the company. They do have a lot on their plate, as well as seeking a permanent CEO. But I do feel that they are very well positioned in the current enterprise refresh cycle. We heard both from Dell and Hewlett that the demand for hardware is very good right now, and that accords with what we've been saying. We are in the midst of a very healthy enterprise IT refresh cycle that is really benefiting the hardware businesses right now a little bit more than the services businesses.
Okay, well, what does that say about Dell, though? Because Michael Dell has been trying to shift Dell into services, make it less of a PC-reliant company. That could have two consequences. No, on the one hand, it could make it more reliant on the U.S. market, which some people have been critical of. And secondly, that it would take it away from the part of the business that's actually doing well right now, the refresh cycle.
Eric, that's a very good point. And, you know, people do criticize Dell because 53% of their fiscal 2010 revenues came from the U.S. That's consistent with what was going on in 2008 at a time when most companies are getting more international in nature. But I will say that because of the shift into enterprise IT services by Dell, they're pushing into a higher margin part of the business. They're adding networking elements, as you mentioned, from 3Com. They're adding to their server and storage capabilities with the 3PAR, Ocarina, and Exanet acquisitions. So they're really going for a higher margin part of the business. In fact, the knock on Dell in the quarter was that their consumer business was year-over-year flat on a revenue basis and was also not profitable. So simultaneously, while pushing into enterprise IT and the high-margin business, they're also looking to kind of rejigger the consumer business to allocate it more, you know, get the operations more in line with where the markets are and push profitability back up in that business.
Jim, one quick question before we go. There was talk a couple of months ago that Michael Dell was thinking about taking Dell private. You think that's ever going to happen?
I don't think there's an enormous impetus to do that right now. And I do think that Dell has kind of turned some corners here. I think they really, you know, much of the call was devoted to Steve Schatzker yesterday. They really are pushing at enterprise IT. I think they've made some important transitions, and I wouldn't look for that to happen. I don't think it's a big priority.
All right, Jim, I'm afraid we're going to have to cut it off there because we're going to have to go to break. Jim Kelleher, one of the most accurate analysts on tech stocks with us this morning.